Hey, everybody. Hey, Mark. Hi, Keith. Thank you guys for always joining me on Tuesdays. I thank you every week, but it's like, I don't even know why I say you're special guests anymore. We might as well all just be co hosts at this point. Thank you, everyone, for joining us. I'm Jen. I'm here with Keith Allen, TA and algo trader, order book analyst, and co founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Guys, I tagged you in a post I saw yesterday on X, and it was about why this person thinks that the 4-year cycle is dead. And I thought it would just be an interesting take. You know, when the election came around, we kind of looked at historically, what did the halving do? You know, how were the elections, you know, in the United States affecting this and, you know, the market. And the 4-year cycle has been this narrative since, I guess, kind of inception, right? Curious to hear your thoughts. And I thought maybe, you know, I don't know if either of you guys could share your screen. Maybe we could just look at the Bitcoin chart and see, you know, what has the cycle previously looked like? What might it be, you know, shaping up to be at this point? And what do you guys think on that? Have you considered this previously before I had tagged you both in this one that, you know, post that I had seen?
Of course. You know,
Yeah.
the 4-year cycle on Bitcoin is you know, something of a it, it, it's generally accepted, right? People treat it as being gospel truth. And you know, it's not too difficult to understand why. You can see on the chart that I've got here that there is sort of a you know, a clock-like phenomenon happening in Bitcoin, and I'm only going to take it back to 2015. So having a look at the last two cycles and the cycle that we're currently in. But we can go back a little bit further. It's just that the data back here gets a little bit, you know, it's not super reliable. This was kind of, you know, in the early adoption phases of Bitcoin. So we'll look at the stuff that I would say is kind of, you know, more recent history is always more valuable than older history. And so what I want to show you here is the white lines that I've set up here. And what I've tried to do is to, you know, choose a relatively impartial market bottom. So I'm counting the wicks because this is the weekly chart, and I think the wicks are useful. And so I'm just looking at, you know, what was the bottommost part of the bear trend of the capitulation, and then looking at where was the, you know, the peak after that before entering into a new bear trend, and so on. And you know, I'm not, you know, I don't want anyone to think that I'm suggesting that I'm the first to recognize these things. This is the sort of religion around Bitcoin, and how the 4-year market cycle that it exhibits might coincide with its 4-year block reward halving process. But one of the things I want you to point out here is if we take it from the market low on January, on the 19th of January 2015, and measure how long it took to get to the market high in on the 18th of December 2017, we measure 153 weeks, right? So this was a 153 week, you know, bull market. And then if we take that top again to the objective bottom, that lasted, I think, 50 weeks. So we've got 153 weeks uptrend followed by a 50-week downtrend. And you'll notice that the next cycle repeated that exactly. From the objective bottom to the objective top was 153 weeks or 154 weeks, depending on exactly where you measure the top. And then that was followed by an exact
50 week again. 50
50
weeks.
week
Yeah.
again. So it's 153 to the top, followed by 50 to the bottom. 153 to the top, followed by 50 to the bottom. And then, you know, if you say, okay, well, if that's going to play out again, you know, this time, we can actually measure, you know, when the bull market is going to end, right? Which should be on, you know, the 6th of October of this year. But one of the things that you will notice is that the returns are diminishing. Okay, so if we measure from the bottom to the top, in this first cycle, that was a 13,000%, you know,
Uptrend, gain.
improve in value. And then in the second cycle was a 2000%. And so, the returns are diminishing. It goes up for as long, but it doesn't get nearly as high. And, I can't remember exactly how I came to this specific point. But, I'm expecting something like 800% for this market, which would bring Bitcoin to something like $151,000. But again, like this is, I have zero confidence in that projection and the specific time period. And I'll tell you why. Notice that, the 13,000% followed by 2,000% or whatever it was, is a pretty dramatic change in the improvement in Bitcoin's value. So the upside is diminishing, but the downside is relatively consistent. So for this downtrend, we saw something like 80%, 80% down or 85% down. And then this one was pretty similar, right? Something like 80% down as well. And this is not the first time that someone's pointed this out to me, especially from the people that got into Bitcoin very early, is that the reason that they're happy with the Bitcoin they accumulated early, because the upside was much higher than the downside, or at least it was disproportionately larger. Whereas today, the downside remains the same, but the upside is always diminishing. And this is a difficult thing to maintain, because it means that the risk of holding on to Bitcoin is always accumulating, if that kind of trend continues, at least on a comparative scale. And so this is a good reason actually to think that the 4-year trend cannot continue. There is also, and this is something that
let me just ask a question right there, Mark.
Sure.
The law of diminishing returns, 100% agree, right? That's not really disputable. And I'm looking for the formula. I want to say it was something like, each year it's 20% up or close to. Don't quote me on that. But even if it's diminishing, it could still happen on the 4-year cycle. So you had just said that hey, maybe this means that the 4-year cycle can't continue. Why couldn't it continue if it was just at a lower return, right? The risk is higher, obviously, because the returns are not as good. But
I mean, yeah, you're right. That was a
does that kill the 4-year cycle, or does it just make it less? Does it make it the risk reward worse?
Yeah, that you're right. That was a misnomer. I shouldn't have said that it kills the 4-year cycle necessarily. It could be that the 4-year cycle will continue, but it will continue in in such a way that at some point, maybe not too many cycles from now, we're expecting Bitcoin to have a bull market of a 10% increase while still risking an 80% drawdown.
So would it be this is a completely different discussion, perhaps, or leads to one, but could that, if over time we see this diminishing return, that would maybe indicate less volatility, a reduction in volatility, correct?
Yes.
And that be a characteristic that a lot of the world would like to see in something that was considered a store of value, correct?
Or something that's considered a means of exchange.
Right. So, the Bitcoin experiment, and let's be honest, we're still an experiment.
Absolutely.
Democracy has been an experiment for about 250 years. Bitcoin's been an experiment for less than 20. And so a long way to go for this asset to mature, for the asset class to mature, to get to what a lot of people think it could and should be. And so maybe that just the 4-year cycle continues. And with the law of diminishing returns, that, It's not and that's why we have alts and memes for people to speculate on and get their big gains on, or attempt to get their big gains on. But even that is starting to pare back a bit, as we discussed last week, that maybe the alt season in the historical sense isn't going to be what it used to be. Maybe we are seeing a migration, a slow migration, but a migration towards fundamental quality and strength versus the meme of the day.
Yeah, it could be. It absolutely could be. Yeah, it could even be that you know, Bitcoin is asymptotically approaching, you know, and remember, we're measuring this versus the US dollar. You've correctly identified Bitcoin as being an experiment in, you know, in currency, if we want to call Bitcoin currency, that's only 20 years old. But remember, the US dollar effectively is a similar experiment that's only about 60 years old, right? Because the US dollar hasn't always been the way that it is. It was only during Nixon's presidency that it transformed from being a gold-backed currency to something that's completely free-floating. So we're, you know, both of these currencies are relatively young, and so, you know,
just think about that for a second, right? Nixon took the leap and said, "Fuck the gold standard; it's holding us back." Right? And look what we could do if we just, well, we'll just print it, and it'll be, you know, the good faith and backing of the United States government. It seems like such a Trump move.
It does seem like such a Trump,
doesn't it?
But in terms of the, you know, like, if you just look at this chart, right, and remember, this is on a logarithmic scale, so it can be, you know, I realize it's a little bit counterintuitive, but notice that it has an almost like square root profile to it. You know, like, this seems to be, it could be asymptotically approaching something, or it could just be like slowing its growth. So it could be that the price of Bitcoin continues, you know, in this level. But there's really not enough data yet. And this is like the other perspective that I wanted to offer with respect to the 4-year cycle, which is that 3 data points, you know, 4 if you're being extremely generous, does not a trend make, in my opinion. You know, I come from, you know, a slightly more like disciplined view of data, where I would, you know, you can't even draw standard deviations around these things. You know, the 3 data points is barely enough to even, you know, draw a straight line with any confidence. I would like to see hundreds of market cycles play out before I, you know, take a much more educated view of things. But of course,
you would be 400 years old.
I would be 400 years old, exactly. So we need to, you know,
really ramp up modern medicine.
Yeah, but yeah, on face value, and this kind of thing happens quite a lot. Like, there's you know, there are clinical trials and things with certain drugs where you might only have, you know, 2 or 3 patients where, you know, you might have had an extremely positive result, and then you need to say, okay, like, maybe it is worth judging this drug as effective, and that we should start taking it out of the trial phase and actually start prescribing it, because the ramifications for failing to make it more available could be to the detriment of people that would otherwise benefit from that drug. Now, we're talking in terms of human health and, you know, longevity of life and stuff. But in terms of, like, if we just treat it coolly, you could make that same kind of comparison to, like, value and the benefit that people will get from, you know, holding or purchasing an asset that's appreciating in value, and the benefit that that's going to have on their lives, right? Remember, poverty is still the #1 cause of death in the world. So, you know, with these data points, what conclusion, you know, should we draw, and how much confidence do we have in it? I think that the fact that it does have, like, such a strong, you know, the error bars on that 153 is very, very tight, and the 50-week drawdown is as well very, very tight. So two conclusions. One is that this is a natural phenomenon, right? This is something that emerges from the 4-year halving cycle of Bitcoin, and that's another piece of, you know, extremely useful anecdotal evidence. Which, you know, if we just saw a 4-year cycle appear out of nothing, like if we saw this on, I don't know, gold or something, without like a really compelling causal indicator for why it might be 4 years, you would have a lot less trust in what that trend is telling you. But in Bitcoin, we actually do have, you know, the 4-year halving cycle to point to and be like, well, this 4-year market cycle might not be coincidental, but is probably an emergent property of, you know, some, you know, of that that token emission schedule built into, hard coded into the Bitcoin blockchain. But then you can also look at it the other way and say, well, self-fulfilling prophecies are a thing. You know, this could be that people are anticipating this effect, and so the market is manifesting these 4-year cycles because of the, you know, the 4-year halving cycle in Bitcoin. There's really no way to go about it. But yeah, at the state that we are now, it's very, very clear to me that the 4-year cycle holds water, right? And for people to be speculating that the 4-year cycle is over or we shouldn't pay attention to it yet, we don't have any reason to suspect that this trend will end. You know, like if you were a betting person, you would have to say that you know, the data suggests that this is going to continue, even if we don't know for how long. But then on the flip side, you have to remember there's something called the gambler's fallacy, right? Or the hot hand fallacy in basketball, which is no matter how many, how many times you flip a coin and it comes up heads, the odds of getting another heads is always 50%. You know, it doesn't matter how many consecutive heads you've had in a row before that. And so this could be the same thing, right? Just because you've had 3 rounds of 4-year cycles doesn't necessarily mean that it's going to continue into the future. So the short version is the jury is, I think, reasonably still out. Is the 4-year cycle a legitimate phenomenon? It appears to be, but we can't state it with any level of conviction because there are just too few data points. And making predictions about the future is extremely difficult. So, you know, it is what it is. You know, it's a easily recognizable pattern, but you know, there is no law of the universe that says it should continue or should even have happened in the first place.
Keith, do you agree with him? You were kind of stopping him earlier when he was speaking about the law of diminishing return, and you know that it doesn't necessarily mean that the 4-year cycle is dead, right? Or
well,
that
I wasn't disagreeing. I was just, you know, pointing out, you know, maybe this is evolution, right? And that you know, we are noticing a dynamic shift in the market of how things, how the market reacts, how the health of the market, the strength of the market, the patterns and things that we're looking at now, how they have shifted from the way things used to be, or seem to be evolving, I guess maybe is a better choice of words. The market is maturing, and
one second, Keith, I'm going to bring yours up. Mark, we're going to revisit yours in a minute. I see that you're playing a little bit more. While Keith is talking, I'm going to bring up his chart real fast. Go ahead, Keith. Sorry.
The market is maturing, and in more ways than one, right? We have institutional demand, we have ETFs, we have a crypto-friendly administration and policy starting to form. We have a lot of things working in the market's favor right now, just in terms of overall health of the market. And we still have plenty of the speculative craziness and Wild West that goes on in this market. But in terms of the strength and stability of Bitcoin specifically, I think it is fundamentally stronger than it has ever been. And I think that on the alt side, I'm hopeful that we're going to start to see more of the cream rise to the top and have more focus on quality than the quantity of shit coins and memes. That said, in terms of the 4-year cycle, and I am not by any stretch of the imagination a specialist on this. I actually follow a guy named Bob Lucas, who is an expert on it, and I believe a lot of what he says. And the most simple way I can state it is, yeah, it's plausible that the 4-year cycle may not continue forever, and that this one may not play out exactly like the others have. However, as Mark pointed out and illustrated, so far we seem to be on pace for what has happened in the prior 3 cycles, and nothing has broken. Now, if something broke in the structure and said, okay, maybe it's off, maybe this time is different, then yes, we could then explore the conversation and the speculation that the 4-year cycle is dead. But right now, it's still intact and it's still alive, in my opinion. These are the blue vertical lines are each of the prior halvings. Here's the most recent one. The next one is way out here in 2028. And, the market is notoriously impatient. I mean, unbelievably impatient. And if it's not, if price isn't just moving, people get frustrated. And that's when they start to speculate on what is and what isn't, what has not, right? And so look at how early we are in this cycle comparatively to the prior cycles. This is also on a log scale. I mean, we are super, super early. And to change gears a little bit now, in terms of what would we look at to maybe point to a breakdown, we just had a conversation in our Telegram group about Binance selling, I mean, a metric ton of assets. I think they sold half of their 14 billion in assets recently, like in the past month or so, and which makes you scratch your head a lot, right? Why did they just sell? Why did they just sell all this stuff? And let me see if I can pull that up on my side and actually refer to the amounts. But I mean, it's really significant. Why would they do this? And have they done it before? Well, turns out they have done it before. And the last time they did it was after the 2021 mid-cycle top, which was in April, and they did it in May. Now, what happened in May of 2021 coming off of that top?
Oh, I remember May of 2021.
Right? That was the beginning of the end. we saw, or so we thought. It was a huge correction, right? It was how deep was that? How deep did that go, Mark? That was
big.
50, 60 points. That was 56%.
Yeah.
Okay, that was the mid-cycle top. Look at what happened here. Green is the 21-day moving average. Death crossed the red 50-day, death crossed the blue 100-day, and then it was just like a cascade, right? Through the 200, bottomed out, finally climbed our way back in. Look at where we sit today. Possibly on the cusp of something similar developing. We're pinned right now between the blue 100 and the red 50-day moving averages. We have this nice little support level here that's formed right here around this 96.5 level over the past week or so. But if price does not reclaim the 50 and then the 21-day, so we can RS flip this 100K level, right? That failed. If this doesn't happen, if price can't climb above this, then we're going to see this trajectory continue where the 21-day comes down and will eventually cross the 50. And if it doesn't bounce from there, it will then cross the 100. And we have a very similar scenario to what we saw here at the mid-cycle top. So imagine.
What sort of time frame was that? 6 months, maybe?
This was January. The cross actually happened in May, right? So the first one was right like May 1st. Don't we have a saying in trading, May go away? May down to July. And then bounced to a new all-time high. So imagine if we're seeing a similar scenario here, that this 109K level could be the mid-cycle top. And if we were to get that big correction from here, that big correction that, we've been talking about for a year that hasn't materialized. If we went as deep as we did previously, that would pretty much annihilate the trend. I mean, there might be some last ditch hope if we went to the original trend. Let me see if I have that still here. Okay. So even that would break the trend if we went through this macro from back in the FTX crash. I don't expect a correction that deep that would go beyond that, because if it does, then we're talking, okay, maybe this 4-year cycle thing is in question. But at the moment, it still looks solid to me. And so I would look for, obviously, the upside that we want to see would be reclaiming this to keep everything healthy and intact. However, if we're going to get that breakdown, I'm looking along this. Let's see where the 200-day. Actually, I think on the weekly it looks even better. We have the 50-day. As you can see, the 50-week. Excuse me. As you can see right here, pretty well correlated with the trend line. So this would be a hot target for me at this stage. And until we see a breakdown further, I'm still of the mindset that the 4-year cycle is intact and quite healthy.
It's interesting to hear that Binance had sold all of those off, and to see when the last time they did that was.
Oh yeah, let me see if I can find that really quick.
I hadn't seen that news, and I mean, as soon as you shared it, I think the natural reaction is why.
So
right?
Binance sold $4 billion in Bitcoin, which was almost all of its Bitcoin, $3 billion in USDT, $700 million in ETH, $8 billion total of its $14 billion in assets. And this was money, this was money they generated. This was revenue. This wasn't user funds. This was money that they generated. And so why are they doing that? Great question. And there's lots of reasons why they could do it, right? They could be doing it because they need capital to invest in something.
100%. But
right?
looking at the last, the reason why they did it last.
Totally legitimate reasons. But they could also be doing it because they anticipate a correction.
Mm-hmm.
So long list of reasons why they could. And we would we'd be speculating if we honed into any one of those. But I just look at the indicators, right? No sense in speculating as long as we're working in this realm. Here's the area of interest. If it breaks down, you know where you're looking. If it moves up,
let me ask you.
We keep going.
So here, FT3 says they tweeted recently that they did not sell. Where did you hear that they did? Was it I'm sure it wasn't a wallet. I'm sure they're not using DeFi, right?
Hold on 1 second. Let me get to this. Back to my tweet. I'm doing a lot on one screen here.
Well,
let me get it back to the other screen.
Quite the number of tabs too. So you've got a lot going on.
Listen,
from all different angles.
I'm a busy guy. Okay.
I get it.
I don't have time to do all that tab. I don't have time to close all the tabs every day. Okay. I have to pick up where I left off and keep the ones I want to look at every day open every day.
I don't blame you.
So let's see. We saw. So that first post came from, of all places, you're going to find this crazy, but Twitter. I'm going to share that link, that direct link to that post if you wanted to.
Yeah, we'll throw it in the comments. And
Yeah, let me see if I can throw it in the comments. I can't post in comments for some reason. I'll have to put it in the private, and you can post it in the comments.
okay. Sorry, I don't know why you're cut
that-
off from the.
That was the first. That was the first hint of it, and then we actually see the data in our 14-day. Let me see if I can see it on this chart. Hold on one second. And if I can, I will bring it up.
Have we looked at this yet?
No. You know, I don't. I have.
I know.
I got a few things in the toolbox I don't always share.
But these are this are toolbox things that people can actually access themselves with a material indicators account or subscription or what?
They can.
Yeah.
I
want to know.
Let's go with. Okay, this is not the chart I'm looking for. Hold on a second. What chart did he?
It's pretty though.
I'm glad you like it. Growing change in and it's in the CVD chart.
It's interesting how you were looking at the cycle, the full 4-year, and Mark really focused on that, like up. You know what I mean? Like here is the time frame and the percentage that it had increased from this point to the cycle top. And then here is where it was. So Mark had kind of broken it down where you're looking at that bigger 4-year cycle, 2028. And he's looking at October of this year as this is kind of where that might top out. Speaking of 150, Mark, you said cycle top. You must have done the chart after you had made your prediction for the cycle top, because I'm going to remind you, you said 185 to 215.
Yeah, I think that's probably a little high, but whatever.
Mark is evolving.
I was in a good mood at the time.
Mark is getting back to his bearish self. Look, he found himself a little bit too optimistic and needed to pull it back in.
Yeah.
So, in terms of evidence on the CVD, we can see there was a pretty significant sell-off. This is on Binance, by the way, and here we go.
So that is their funds. I mean, this is what you're tracking here with this chart. This isn't just funds in general.
This is basically liquidity coming off of the exchange.
That's pretty steep. We can't see those numbers very clearly through the screen share. Can you tell us what it was and what it is now and what sort of time frame we were looking at?
Okay, this is on November 21st or November 22nd. We're at 1.4 billion. And it went down to -6 billion. So, that's about 8 billion, do the math. That's to 6.7 billion minus 6.7 billion. So that's about 8 billion. And that's the number that we just said, right? They sold 8 billion.
Minus 6 billion? Like negative?
Yeah.
6
So that's a total
on their exchange.
So this is outflow, right? They were net positive up to 1.4 billion. And they sold roughly 8 billion worth.
Okay, now I'm going
So
to
it's a net.
again.
It's a net of buying and selling, and obviously the selling dominated here, and now we're starting to see a small bounce.
And the last time we had seen that was kind of that local top. Now it did recover quite a bit from the last time.
I don't go back. This chart won't go back that far. This is like 3 years. Can't get back to 2021. Nope. 2022 is February 2022 as far as I go.
FT3 shared a Cointelegraph article or a post. Maybe we can look at that after and kind of compare what it is that
Yeah.
they're saying and what it is the actual data that you're seeing. Because I'm curious, if it's not that, then what is it that we're actually looking at, right? And what significance does that have if it's something different?
Well, it's a good question. Those are all great questions, and I've literally just saw this pop up like 5 minutes before we started the session, so I haven't had a chance to
Yeah.
take a deep dive into it yet. But I would say that uh, just like we talked about the 4-year cycle, you can speculate all you want. Just look at the charts. The
Yeah.
charts
The
break
actual,
down, then we got a problem. If the chart doesn't break down, then we don't have a problem.
yeah.
It's as simple as that. So, I mean, there are so many things that we could focus on, and everybody come up with different opinions and speculate on different things that are happening. Or we could actually just look at what is physically happening in the chart. And if this support holds here, we're good. If it breaks down, maybe it holds down here, where we had this prior support. We've had like a dozen tests down here at the 91.6. And if it doesn't, then we're looking to the next levels of where price could go.
I was going to say
And
that death cross makes an appearance. Where are you looking at?
if
Not the 91. That's too close.
say
We're
that again,
looking at the death cross that we were
right,
looking at previously when there was the sell off, right? I
right.
think there were
So
two death crosses that you had mentioned.
it
So,
starts as it did before. It starts with the green 21 day, first
mhm.
crossing the red 50, then the blue 100, and it's when
Yeah,
it
so
crosses
one at a
below
time. We'll see how it
when
goes.
it crosses below the 200, it's really bad.
Yeah.
Okay. And so seeing things break down in this manner, um, right now we're steady. We're getting pinned into right. A decision is going to have to be made soon, right? Because we're moving into an inflection point as all the moving averages are squeezing together right now, right? By the time we get through this box, um, something's going to be forced. The move is going to be forced one way or another.
What's the liquidity telling us? Because the liquidity the placement of the liquidity can force those moves, right?
Absolutely. Well, funny you should mention that. It was looking pretty good previously until a big block
Till we
got
started our
removed.
call.
Right, right. So last night I was zoomed out a little bit. Maybe I went to the 6-month chart. Put some contrast in here. And so seeing this ladder disappear, not a good thing. Not a bullish thing. So we have this range between
95 to
91.5,
85? Okay.
91.5 and 100 is pretty much the range right now. And you see some liquidity floating its way up, and that's about where that moving average is that we're trying to hold above. So it's you just have to watch it and see how it develops. This stuff changes every single day. And like I said, we were looking good last night, I thought, and then I woke up to something different, right? This block of 30 million doesn't sound like a lot of money, but a $30 million block of liquidity moves price. Okay. You see, it appeared, price moved up. It disappeared, price is starting to move down. So if you're going to play the intraday like that, then you're interested in watching this on lower time frames to see how things are developing. If you're a longer term investor, you know what the ranges are, and you're probably not responding to all of this intraday, intra-week, intra-month volatility.
Right.
Right now, if things break down, then you know where your targets are from there. Meanwhile, this isn't happening everywhere, right? We often see, especially in crypto, a high tide raises all boats and a low tide lowers all boats. And we do see a bit of deviation starting to happen. I'm not saying that we're far from an alt season because those metrics need to change, but that may be something that is developing. We looked at this chart last week, and since then I took a much deeper dive into this. And if you recall, the candles are Bitcoin price. The orange is Bitcoin dominance, currently sitting above 61%. Purple is total 3, which is all crypto excluding Bitcoin and ETH. And the green is USDT dominance. And what we're seeing now, we had a divergence where Bitcoin dominance was on the rise, and we know that alts have been getting annihilated the past couple of weeks, but we're starting to see a bounce out of alts. Now, for a true alt season to develop, we need to see total 3 climbing. We need to see Bitcoin dominance dropping, and we need to see USDT dominance also dropping, right? It spiked, it started to pull back, and really in the last few hours, it started to tick up just a little bit. So there's some uncertainty happening in the market right now. No question about that. I think Chairman Powell is testifying live today. God knows what, little nugget he's going to say that make the market react. Who knows? But there are some glimmers of hope.
I feel like there's a lot of uncertainty.
There is.
I mean, like we talk about the
we're actually back to fear.
Are we?
We're back to fear. I don't know why this woman is staring at me with Walmart car insurance, but we're back. We're back. We're back to a level of fear. This isn't the kind of fear that marks bottoms. Normally, we're down in the 10, 11, 12 zone to really mark a bottom, but the market is fearful again. We have coins, that potentially have capitulated. Look how deep ETH went last week. I mean, it went down to almost 2K and has bounced back, had a nice bounce back. Look at Litecoin. Litecoin bottomed out on the trend. Then within, I guess, the beginning of the month, support test down through the 100-week moving average, excuse me. And now look what's happening. We have actually a golden cross about to form. Oh. It's already unwound from the 100 and the 50, and this is the last piece of that pie. So before we started the stream today, price was above this 0.5 fib. That's a retracement from the prior high, from the May 2021 top. And if we can flip this 0.5 fib, then you've got obviously the 618 ahead of that. That's another 31% move. And then we're on a trajectory for an all-time high. This rejection right here at the moment, right? Is this temporary, or does this develop into a breakdown back below the moving averages? These are things we have to watch. It is always a fluid situation with this market. You can't say what I'm looking in at the charts today is going to play out next week, because there's always something else coming at us.
Yeah.
It's an organic, it's a living organic, it's a living organic beast.
I know, because we've been looking at some of the charts and the, like the data that you produce and offer up material indicators. And I think it was one day it was like right before our eyes, liquidity had disappeared. Mark, I saw that you were sharing your screen, but then it went away. Are you no longer?
I can. No, I'll bring this back up, because it's a, we're talking about the 4-year cycle, and maybe
do you mind if I bring Mark's back up here for a minute? Okay, you got to share me, Mark.
Yeah, and so I'm going to share my whole screen, because I'm going to have to switch between a couple of different applications here.
Wait, we're going to have to see two of us?
No. I'll switch between my browser and Excel.
No offense.
And so what I wanted to show you was that I started the call by showing you that there's like this consistency in the 153 weeks of continuous uptrend, followed by 50 weeks of downtrend. And so like this line here all I did to draw it was to say, okay, if this was the market bottom here, and we extend that out for 153 bars, then I'm just going to draw a line that like roughly fits this trend line, right? That's I didn't do anything more sophisticated than that. But what would it look like if I was to attempt to draw something more sophisticated? You know, like rather than just eyeballing a straight line through the data and where I think a reasonable projection might be. So I think that this is like, you know, a fun experiment. What I've done is to just basically take the, you know, the last few cycles, and I've extracted the, you know, what marked the cycle top. So 1184 back in, you know, December of 2013. 19417 back in December of 2017, and 69203 back in November of 21. And so what we can do is take, and then the 69203, if I didn't already say that. And so what we can do is we can just say, okay, if this is, you know, cycle 0, cycle 1, cycle 2, cycle 3, like what, you know, from 3 data points, which again, it's a huge stretch to say that you can perform any kind of analysis with only 3 data points. But let's forego our, you know, our statistical better sense and ask the question, like, where is this trend going? So one of the things that we can do is to just say, okay, with these 3 data points, can we
do me a favor, zoom in on that a little bit for us, because I know that our viewers aren't going to be able to see this as clearly as you and I can and Keith can.
Sure.
Cool.
How's
Thank you.
that?
That's
Is
clear.
that a little bit better?
It's much better. Thank you.
So one of the things we can do is say, okay, can we fit a function to these 3 data points that agree with the data that we've generated? And you know, one of the ones that makes sense, like I said before, it looks to have a sort of square root profile, so it makes sense to fit a polynomial to this, and just to make the presentation consistent with what we're seeing on the Bitcoin chart, I'll make this logarithmic scale. So this is that kind of diminishing returns curve that we've seen before. And one of the things that we can do is we can actually show us the equation that results in that trend. And so this is telling us, this is the equation for what the cycle top price is based on the cycle number. And so we can actually just put this, you know, put this equation to work. So 15776 multiplied by the cycle number squared, plus 2456.5 multiplied by the cycle number, plus 1184. And this gives us the expected cycle top if this pattern continues. And we can do this at, you know, into the future. So this is telling you that we're getting, you know, we're expecting $150,000 Bitcoin this cycle, and then 263 next cycle, 407 the cycle after that, 583 the cycle after that. Now, what's you know, interesting about this is that this number, 153, or, you know, $150,538, is that this is what it's, you know, what we're anticipating is the market top this cycle, given just the 3 data points that we had before that. But, you know, relatively good guess. If we switch then back to just this like eyeballed line that I just drew through the data set, and extracting, you know, extrapolating into the future exactly 153 bars from the bottom, I get 152,600. Like that actually has remarkably good agreement with you know, with what this function is predicting. And that's interesting because all I did here was to observe that there was roughly 153 weeks of uptrend, and then say, okay, if the current price trend continues for another, you know, until that 153 thing tops out, we actually get corroboration of this number. You know,
so if somebody believes in this,
152,000.
they can go ahead and set orders for somewhere.
Yep.
Start, you know, like Keith, I know you do more centralized exchange, right? So you'd ladder and start scaling out with some different orders if you believe that this would play out the way that it has the previous cycles, right?
Which takes a
Mark,
lot of guts, you know, like this is, you know, like don't be tricked into thinking that because we've put some numbers into a calculator and extracted some number that happens to agree with our, you know, our projection, that this is confirmation that this is true. It's not that
confirmation, but if you're not looking at the data points that you do have, then how else are you determining this? I mean, Keith, right? Like you're looking at the data, the here and now, right? But what if there's emotions involved, I think, in both scenarios, right? You're looking at it and it's like, okay, I see this. Do I make my move? Do I start selling this off now? You know, if someone did believe in this, then they can go ahead and set some orders. I'm curious, and we have a few minutes left. What I want to know is, you said, go ahead.
Sorry, just to conclude the thought, is that, you know, if the 4-year cycle is true, and we do have confidence in this almost 153 weeks of up followed by 50 weeks of down, then just knowing about it ought to destabilize it, for exactly the reason that Jen is pointing at now. Because, you know, if it is really governed so predictably, then, you know, all else being equal, everyone should go short on, you know, Monday, the 6th of October, 2025. And then everyone should go long, right, on Monday, the 14th of September, 2026 at $29,241. You know, like the market cannot operate that way. Like the markets only work because people disagree.
Right.
This is the problem with the 4-year cycle.
Do you think that's actually, Keith, you said right. You think that the market works because people disagree? I mean, sometimes you see that all of a sudden sentiment, everybody is so scared of this being the cycle top, and it starts the big sell-off.
Right, but there has to be two sides to every trade, right? There has to be right. One trader's sentiment that it's the top is another trader's sentiment that this is a great time to buy.
Yeah, there needs to be someone to sell to.
100%. I understand that, right? But because there's this pattern that we're calling out, you think that it suddenly will no longer come into play because it's what some are expecting?
Well, what I'm saying is the more predictable it gets, the more unpredictable it's going to become, right? Because as soon as it becomes predictable, it breaks itself.
Okay, fine.
Right,
so all of a sudden,
among other things, it gets front run.
I was just going to say that, right? So, okay, Mark, you're saying if everybody believes this, then October 6th of 2025, everybody should short, right? Well, if everybody's shorting, somebody's going to come in there with
and squeeze it,
right?
Exactly.
Okay,
and then maybe we'll be in a new paradigm. But yeah, it's you cannot. I think it is an unreasonable position to have that the 4-year cycle will continue indefinitely. I think that, but I agree with, I think Keith and I are basically on the same page. The 4-year cycle is a completely identifiable phenomenon, and there's no reason to suspect that this time is going to be different. And based on, the 10-minute analysis that I have provided here and eyeballing this thing, we can forecast with some level of confidence a Bitcoin top somewhere around $153,000 occurring sometime in the first couple of weeks of October of 2025. If you subscribe to the Bitcoin 4-year cycle model.
Yeah. What were you going to say?
And I would echo that, and I would say there's no reason to believe the 4-year cycle will not continue until we actually see evidence that it's breaking down.
The trend is your friend till it ends, right? You should believe the trend will continue until it doesn't continue anymore.
Until it's no longer a trend. Yeah.
Which is super helpful and unhelpful at the same time.
So did you, Mark, I mean, we're splitting hairs here, but did you say your target was 156 or 153?
152 was what he said.
So yeah, based on the calculation, I'm projecting somewhere around almost 150,000 flat.
Mm-hmm.
and based on the trend line, somewhere around 152.
Okay. So that, I mean, that all sounds legit to me. You know, I think that 150, just, you know, the round number, will always be a psychological resistance level until it's, you know, until it's taken. In terms of what that looks like in a technical indicator, you know, I'm still waiting on this measured move. May or may not play out, but if it does, you know, that's a target for me. But had it occurred weeks ago, it would have run right up against this lifetime channel here. So in terms of Mark's timing around October, right? That could be, wait, I'm on a monthly, so somewhere around this level to get to that channel. We may never make it back to that channel, right? But what is attainable, I think, if we clear this measured move and we do top 122 ish, is this next fib extension at 2.618, and that's at a 156 level. These things aren't perfect, right? You don't hit it to the letter every time. Sometimes you do. I mean, look at where we're hitting resistance right now is on an extension. We had a little overshoot here. So that's conceivable in my mind. And it would make sense. You know, I've heard numbers all over the place. We all have, right? This cycle top's going to be, you know, what's Robert Kiyosaki says, like 350. We hear 500. We hear 7-figure Bitcoin. All of those things are possible. I don't know that they're a high probability for this year. And so, you know, the wild card being no telling what the administration is going to do. And if we do see a serious, aggressive push towards a Bitcoin reserve, I would expect other nations to follow, and that could have an impact. We already know that we have individual states in the U.S. are pushing, are adopting Bitcoin reserves of their own. So there are a lot of elements that could contribute to astronomical numbers. But as always, I don't speculate. I just play it level by level, range by range. I look at the indicators, and if we clear one hurdle, okay, now we can, you know, possibly work our way to the next target. But I'm not banking on any $350,000 Bitcoin this year.
Not this year, maybe next year.
Maybe. I don't know. Maybe in 10 years.
I don't know. I was looking at those projections that Mark had for the next couple cycles, and they don't look so bad.
Well, yeah, let me see the rest of that list.
He's only got the next 2 cycles there.
Yeah, I mean, okay.
It was 150, and then what's the one after that?
So 150 in there somewhere.
So the next cycle top in
bring
September,
back your
Mark,
spreadsheet. Bring back your spreadsheet.
Yeah, this is off the spreadsheet. But yeah, so 263, 426, and that's in let me see here. That's August of 2029.
Guess what? That's aligns with the 4.618 extension.
There you go.
So yeah, what date should I expect that to happen? I'm going to go ahead and place those sell orders now.
Yeah, and this is also like, this assumes a lot, you know, like I just want everyone to be clear that, you know, when Keith and I do these kinds of things, and when you see me drawing these lines and making these calculations, like, there is no way to predict the future. All we're doing here is asking the question: if the trend continues the way that it has the last few years, what would that look like, you know, 2 or 3 years from now? And that's what we're drawing here.
Yeah. Well, you guys are awesome. Thank you so much. I know we went a couple of minutes over. Thank you to all of our viewers in the comments, and FT3 and Daniel. Appreciate you guys. We'll revisit this. I know that you said that there was some news that we are expecting that may be leading to that fear, you know, over greed that we're seeing at the moment, Keith. So we'll have to keep our eyes open for that and see how it plays out. And
on the Binance thing, somebody just posted in our channel a tweet from the Binance customer support page, Binance, at Binance Help Desk, that states now this post states that Binance is not selling assets. This was simply an adjustment in the Binance Treasury's accounting process. User funds are SAFU as always, and that is timestamped today. I just went to that channel, just went to the Binance customer support page on Twitter, and that tweet does not exist. So either it's fake or they pulled it, or I don't know how to use the platform.
It was deleted.
I don't know if it was deleted. I don't know if it's real. So I just asked them to pull, show me a link to that tweet, not a screenshot of the tweet.
Yeah. Interesting. Well, Daniel wants us to know that we are amazing. So thank you, Daniel. We appreciate you and we think you're amazing also. And Keith, tell us more. He wants to see, he would love to see more of this in the mornings. I know that you do your own analysis and stuff in the mornings. Do you do that every morning? And can you share that?
I do it almost every morning.
You do it, and if not in the morning, it seems like in the afternoons even maybe. But if you're not following Keith or Material Indicators, please do on X, because he does his own broadcast there and his own analysis and jumps into Material Indicators as well. And it's the X account. And Keith, you can correct me if I'm wrong because I do this. Your personal KA Productions. Yep. And for Material Indicators, MI_ALGOS.
Correct.
So if you're looking for more of this in the mornings, I know it took me a year. If you're looking for more of this in the mornings, we do this every single Tuesday morning, every other, keep an eye out for Keith and for Material Indicators.
Yes, today's blockchain banter serves as my daily analysis for the day. Your
daily dose of Keith.
I have been doing them pretty consistently through the week. I will be out Thursday. I will be out Wednesday and Thursday of this week, mind you. But
we all get sick days.
Yeah. Oh, that means I might
I say that. I don't have sick days.
I might have to crank one out this afternoon if I can make it happen. But pretty consistently on X and YouTube. So you can.
And Mark, we are connecting for another blockchain banter tomorrow. Also, so this is just more of our general DeFi blockchain discussion. So be sure to keep an eye out for that as well. Awesome. Okay. Well, you guys are wonderful. Thank you again. I know we're over, so I don't want to keep you. And thank you again to all of our viewers. We will see you next Tuesday.
Thank you. Have a great rest of the week.
You too, guys. Thank you. We'll see ya.